Alright, what's going on, guys? It's Tremaine here, the most disciplined day trader on YouTube, looking for the ICT 2022 model. Going to use that as a framework for this trade idea. So we have our market structure shift above that short-term high, and I'm looking for an entry inside of this inversion fair value gap here. So we've taken out sell side, traded into a bullish breaker, and if we trade down inside this inversion fair value gap, that will be my long entry. I'll go ahead and draw it out. Right there. So long 2 contracts, and I like the buy side. Let's go ahead and adjust this. I like this buy side as a draw liquidity. It's really clean, really smooth, kind of like a nice clean triple top, and then obviously buy side up here, but my main focus is the relative equal highs here and then the relative equal highs up here. So in my eyes, we've already done enough damage per se on lower prices. We had a large sell-off overnight in London, and a lot of people are going to look to chase that going into the morning session. So we're in a macro, 850 to 910, expecting price to start spooling to the upside. We have sell side taken out after 830. Bullish breaker, we've already traded into our current new week opening gap here. Rallied higher, come back down into the breaker, clearing out sell side. Market structure shift, which is the framework for the 2022 model. And then the entry PD array that I'm using today is the inversion fair value gap. So looking for one full pull to the buy side. If I can pyramid and add another contract before we take out these clean highs here, then I'll possibly take one contract as a partial. But if I'm only long 2 contracts, then I'll look to just do a full pull for the buy side, resting at around 24,730. Still have plenty of time till the opening bell. I don't mind holding through the open, especially if the trade idea is already, halfway completed and my risk is removed. Even if my stop loss is open, I don't mind holding through the open, especially if I'm confident in the trade idea. But we have a lot of time until then. Still have about 40 minutes or so. And I'm actually going to grab a bottle of water. I'll be right back. Had a good workout this morning. A little pre-market action. I'm not expecting the cleanest morning session today. We do have Fed chair speaking later this afternoon, and we had a large sell-off during London, which is part of the reason why I'm choosing to engage pre-market before the opening bell. Just looking to get my piece, get my little profit, and then leave the morning session to everybody else. But whenever we have Fed chair, I think he's speaking around 12:30 or so. I'm not really expecting the cleanest price action until all that is behind us. So the best times to trade when we have Fed chair speaking is usually pre-market. You want to be done early, or just wait till he's done speaking, and then you can look to engage something later in the afternoon. But as we're heading into that, speech, generally like to be risk off and just tape read. So I'm in here before the opening bell. Depending on the order flow and the feedback, if we start getting fair value gaps that are staying open and it's looking really bullish, we start getting speed above short-term highs, then I'll be more confident holding for just one full pull towards those relative equal highs. But if it looks like it's lethargic and it's kind of stalling, then I'm maybe leaning more towards taking a partial. Morning, babe. Maybe leaning more towards taking a partial. So I'm just watching the candlesticks, and I want to see how they're delivering above short-term highs. I'm watching any bullish fair value gap that's forming. And I want to see if those are staying open, or at least the lower half of it. So those two main factors are what I'm looking at as far as gauging order flow and determining whether or not I want to take partials. Now, should we trade down into it? I'm watching this bullish breaker here. So we have a short-term low. We have a high, make a lower low. So these two consecutive up-close candles, that's one breaker. And then obviously the inversion fair value gap, should we trade down into it? I'll be looking at this region as a support factor. Now, if NASDAQ fails to trade to this and we work higher, then to me that's bullish because it's shown that it doesn't even have a willingness to trade to this region. So I'm watching this area of price action, the inversion fair value gap, and then the breaker. You could trade into this little volume imbalance as well, but ideally I would like for that to stay open, remain unfilled. Want to see NASDAQ start picking up the speed again because we're in that 850 to 910 macro. Don't want to see much consolidation or stalling. This is when I want to see PD arrays act as support and then send price higher with displacement, with momentum, and start digging into those premium arrays. As far as my stop loss and when I'll trail that up and when it gets moved to break even, should we trade to that daily fair value gap that I have listed, annotated rather? Should we trade to that fair value gap, I'll trail my stop up and perhaps move it to break even. Not in a rush to do it, but that's my signal to trim some risk off once we head to that fair value gap, and I have the quadrants annotated as well. Discord members, when we start our live stream and in the market review as well, I'll talk more about that daily inefficiency and what I'm using. The 850 to 910 macro is one of my favorite macros, one of my favorite times to trade. It's usually offers just a nice clean setup pre-market. You never really have to trade past 9:30 if you don't want to. There may be a few instances where you want to hold through the open, but that's not required. Like if you just want to get a quick scalp from inversion fair value gap to the daily fair value gap, that could be your bread and butter scalp during the macro, and you could be done for the week with that. You don't need anything more than that. Anybody who says anything else, anything otherwise is lying to you. So if you have narrative behind your trade idea, we're trading into our current new week opening gap. We have a move higher, displacement. We come back down into a breaker with a market structure shift. You don't have to hold for the relative equal highs here or the buy side here or buy side here. You can just inversion fair value gap to the daily fair value gap, get a quick 35 points, and then done for the day. And then you get to sit back and watch everybody else try to trade the open when we have Fed chair speaking and the morning session is likely to be unfavorable. Now, I could be wrong. We could have the cleanest morning session all year. It wouldn't make me any different, but there's comfort and there's a little bit of satisfaction knowing that you're done with your trading and you get to sit back and relax and just observe and see how everybody else does past 9:30. Nice displacement. I'm taking note of how NASDAQ did not, as of right now, have the willingness to trade down into the inversion fair value gap. We just fell short of it, and we couldn't trade into this breaker. Treating that as a bullish signature. So taking the range from, let's make this taking the range from this high all the way down to the low that was formed, I'm buying beneath equilibrium of that range. Where can you take partials or close your full position? We have relative equal highs here. That's in a premium, and we have buy side here. And I opened up the position with about $1,200 risk. So if I did want to close my full position, I want at least a 2-to-1 risk to reward, preferably a 3-to-1. But 2-to-1 is fine. There's nothing wrong with that. So 2-to-1, that would be around $2,400. I really do like that buy side though, and we have plenty of time left pre-market to try and get up there. So there's that daily fair value gap. I'm going to trim my risk just a little bit. I don't want to be too aggressive or move it to break even. But I'm going to move it beneath the bullish breaker, still allowing NASDAQ to trade down into it. With it being right here and this close to the relative equal highs, I prefer for it not to trade all the way back down into the inversion fair value gap or the breaker. But should it want to do so, my stop loss is affording that. I did my job as a trader, which is trimming the risk by $400 or so, $500, and I'm not strangling the trade idea to death. There's the buy side I'm looking at. And I may take one contract off above that buy side. I'm really just watching to see how it delivers. So this is kind of what I was mentioning earlier. We have a short-term high. We get speed and displacement above it. So I'm watching these imbalances here. If we leave these open and we start working higher, then to me that's very bullish. I'll trust holding for this possibly. But if we retrace and we fill these in and then start moving away, if those fair value gaps fill in, then that's telling me it's not as bullish as I would like, and then I'll be more intentional about taking partials. So I'm watching to see how we trade in here. General rule of thumb, whenever we have two fair value gaps stacked on top of each other like this, I'm always allowing price to trade down into this upper one and offer support. But ideally, I would want this lower one to completely stay open. Now, it could wick down there, that's fine. But this is the main fair value gap that I like to see offer support. And I would not want to see anything in this one, ideally. So what that tells me is if we trade down and completely overlap this range, then it's not as bullish as I would like. And then it'll probably be a good idea to take a partial above that short-term high. because I'm treating this as a breakaway gap. We have a small minor consolidation, displacement leaving the consolidation, that first fair value gap that forms outside that consolidation. If it's good, if it's bullish, you would want that to stay open. So the imbalance that has my focus is here. Once we clear the buy side, that minor buy side here, and it's minor buy side because it's part of this retracement. This is external range liquidity. This is internal because it's a part of the retracement into the breaker. So I'm expecting us to run out that buy side, but reach for something external outside of this range. And then risk comes off completely once we tag that minor buy side liquidity pool. I'm going to go ahead and have a partial ready. Take one contract off. We're still in that macro. Notice how price delivered between 850 and 910, which is this 20-minute interval here from 850 to 910. Get a bit of a price run. And then as I mentioned earlier, from inversion fair value gap to the daily fair value gap, that can be your trade. That's 35 points right there. And you don't have to worry about anything else for the morning session. You don't have to worry about anything else for the day. You don't have to worry about anything else for the week. That could be your trade. And you could tape read. You can paper trade the rest of the week. You don't need or require anything else. So we're working inside of the daily fair value gap. So far, those buy side imbalance, sell side inefficiencies are staying open, which is good. That's bullish. And I am looking to take a partial above the minor buy side liquidity pool. I'll take a contract off. All right, so that's pretty much the business for this morning. Here's that trade you all just watched, getting stopped out at break even. Just fell short of the buy side liquidity pool. And then the buy side here, pretty much bullish all morning, didn't care for anything going lower. And Discord, once we hit 9:30, we outlined this whole thing on live stream, candle by candle. Beautiful delivery, one of the cleanest days this year, in my opinion. Did take a loss at the open. We traded back into the inversion fair value gap with this breaker that I mentioned in that short little video. Well, not short, but we traded back into this region, going long again, looking for same objective, buy side, taking a loss. So now I'm just waiting for more intel. We clear out sell side. Upper quadrant of our current new week opening gap. Look at that on a 5-minute chart. You'll see the precision with the bodies. Short-term low, low in between. That's an intermediate term low. We rally. Discord members will get a more in-depth breakdown video, recap, all that good stuff. Market structure shift above the high. Buying the high of the inversion fair value gap there. Adding one more into the order block. So I'm long 2 contracts. Down close candle. Buying one more. Inversion fair value gap, order block. Buy side liquidity, way too smooth, too clean. And then all this here, too smooth, too clean. Beautiful exit there. So that's the business for today, and that's about $7,000 on the day. There you go. There you go. All that good stuff. All right, so hopefully you found this one insightful. Break-even trade, but you can hear my thought process and what I was looking for. Pretty much the inversion fair value gap, market structure shift, all that stuff that occurred pre-market, I did the exact same thing after the opening bell. So it's the same setup, looking for the same targets, all that fun business. So I'm done for the week with this one. I'll see Discord members. I'll see y'all on the stream Thursday morning at 9:15. YouTube community, I'll see y'all when I see y'all. All right, peace.